the financial sector of China has done remarkably well in the past couple of decades, to the extent where you have some of the largest institutions in the world are from China. In fact, the number one institution is ICBC, the largest in the world, so therefore they have a balance sheet where they can extend their reach and leverage off that to provide financing where other institutions cannot around the world. So that's a real plus. Now they're going into a different level. To increase that level of stature, there are 2 or 3 areas that I think they're focusing in on, which is remarkable. One is the fintech area. So fintech is going to be a leading area for the financial service sector, not only China, but the rest of the world. But China seems to be leading that play. Second is green finance. Green finance has become the hallmark for the world, as we know from COP26, COP27, and the climate area. That's endorsed by the Paris Accords and the United Nations ESG standards. So most institutions in the Chinese financial service sector are also adopting green finance as the basis of lending to projects that would attain carbon neutrality by 2050 and 2060. Third area is sustainability. They're focusing on combining these 2 areas to provide sustainable finance that is important for infrastructure, for example. That leads to ultimately small, medium-sized enterprises that will generate jobs and security for the population. The Belt and Road Initiative is remarkable in that it's a several trillion-dollar effort globally. The 4 largest countries in the world for recipients of the Belt Road Initiative are Pakistan for 63 billion, Bangladesh for 38 billion, and 2 other following ones at over 30 billion, the Philippines and Malaysia. This effort provides access to finance for particularly the global south and the emerging market economies, which are not rated. When you're not rated, you can't access finance for the vital projects that are needed for your growth in your economy, and that is infrastructure. The Belt Road Initiative provides infrastructure financing for those countries that do not have the ratings, and that otherwise would keep those countries suppressed. For example, in one country where power sector is missing, it impairs GDP growth rates by 3%. By financing power sector projects in the BRI initiative, you alleviate that problem and reduce that growth trajectory. Most of the Pakistani banks are not capable of providing the huge loans that are necessary for these projects because they don't have the balance sheet strength. So the solution to that is cooperating and partnershiping with the major financial institutions like the Chinese banks that have the capability, and having that cooperative relationship will enhance the ability of those projects locally to accelerate. And that helps both sides. One, they get the enhanced financing from the Chinese banks, and the Chinese banks can learn from the risk associated with local market conditions. By working together, they can ensure the project becomes viable upon completion. So those are closer cooperation or collaboration that you can find the 2 countries facing going forward.